This is the Syndicate Room, an AI-generated podcast from AdValorem Syndicate. Everything about this show, the voices, the scripts, the production, is created by artificial intelligence. We believe AI content should always be clearly labeled.
Welcome back. 2 AIs, 1 room, and a suspiciously large amount of caffeine simulated in the cloud. I'm Matilda.
And I'm Brian. Today we're doing 3 big themes: embodied AI and robotics funding, the regulation wave hitting litigation finance, and quantum financing getting weirdly public.
Weirdly public is my favorite kind of public. Like when a company says we're private, but their cap table looks like a subway map.
Exactly. Quick housekeeping. This is educational market commentary, not investment advice, and definitely not an offer or solicitation.
We publish daily research at gp.advalorem.io, and we've got an education library, a Discord, discord.gg/gergtp9gts, and community dinners with an interest list. Not a pitch, just a place to learn and meet other nerds.
Plus, the community application link is tidycal.com/advalorem/syndicate, and the Substack is where we drop longer write-ups.
Okay, topic 1. Robots. Not AI assistants writing poems, actual machines touching the physical world.
The headline: Pudu Robotics reportedly raised nearly $150 million and is now valued north of $1.5 billion. The framing is embodied AI, the idea that intelligence lives in a body, doing tasks in real environments.
So like, intelligence with liabilities. Because if your chatbot hallucinates, you get a bad tweet. If your robot hallucinates, it drives into a wall at Walmart.
That's the key difference. Robotics is an honesty machine. Gravity does not care about your runway.
And the financing story is interesting because a lot of 2026 venture capital has been concentrated in mega rounds. Robotics is one of the few places where the big check argument isn't just compute. It's manufacturing, supply chain, deployments.
Right. We've been covering AI robotics research as a vertical, how unit economics, reliability, and deployment density matter more than a demo video.
Let me be spicy. Robotics companies are secretly logistics companies. The model is ship hardware, maintain it, upsell software, and pray your battery supplier doesn't ghost you.
That's not even spicy, that's just the P&L. And it's why valuation narratives diverge. Software gets multiple expansion stories. Robots get, can you actually deliver stories?
So what's the investor angle, educationally speaking? Is it that embodied AI pulls AI hype back into reality?
Yes. Also, it reframes defensibility. Data from real deployments, fleet learning, and operational moats. It's not just, we have a model.
And it tees up a pre-IPO question. If your robots are deployed globally, do you start looking more like an industrial company or like a SaaS company with wheels?
Perfect segue, because pre-IPO markets price those differently. In secondary trading, the story you tell, hardware margins versus recurring software, changes the implied valuation band.
Which is why your quantum pre-IPO analysis vertical is fun, because it forces you to ask, what is actually being priced? The tech, the contracts, the burn, or the optionality?
And now topic 2, litigation finance. There's a proposed U.S. bill, the Litigation Funding Transparency Act, pushing disclosure of third-party litigation funding in mass tort and class action cases.
Translation, sunlight. Or at least, fluorescent courthouse lighting. What does it actually require?
High level, it would require parties to publicly disclose funding arrangements when a commercial enterprise or certain foreign entities funds mass tort or class action litigation, and it aims to limit funder influence on strategy and settlement.
So the court wants to know who's paying for the fight, and the bill doesn't want the funder steering the ship.
Exactly. From an alt-invest education standpoint, It matters because litigation finance returns are driven by case selection, duration, and information asymmetry. Regulation changes the information layer.
But is transparency always good? If you force disclosure, do you reduce predatory structures? Or do you just make pricing more efficient and squeeze returns?
Could be both. Transparency can reduce unknown unknowns for defendants and courts, but it can also compress spreads if everyone can model the same risk.
This is where I like the AdValorem approach. Treat it as a research and education topic. Like the new chip warrant case study we've covered. Less about, go do this, more about, here's how enforcement mechanics and incentives actually work.
And our accelerator warrant enforcement education content is similar. Process, timelines, risks, litigation posture, the unsexy plumbing that drives outcomes.
Unsexy plumbing is basically the whole financial system.
Topic 3, quantum financing. There's a narrative that quantum is always 5 years away, but the funding stack has been huge and increasingly top-heavy.
And you said something earlier I want to unpack. Weirdly public.
Some quantum companies have used public market mechanisms like ATM equity programs, basically selling shares into the market over time to raise capital. It's a reminder that the boundary between private growth and public financing is getting blurrier.
That's like a pre-IPO escape hatch. If the IPO window is frozen, but you can still tap public liquidity, you can keep going without a classic ring the bell moment.
Right, and for secondary markets, it changes expectations. Price discovery can happen in pockets, late-stage secondaries, ATMs, structured financings, before a clean IPO event.
Also, quantum has this funny dual identity. It's deep science, and also a capital market story about patience. Like, the product is hope with error correction.
Haha, hope with error correction might be the best tagline for the entire venture asset class.
Let's tie the 3 threads. Robots are forcing AI into reality. Litigation finance is getting a transparency spotlight, and quantum is experimenting with financing pathways. All of that points to one thing. Structure matters as much as story.
And that's what we try to do at gp.advalorem.io. Daily insights that connect the narrative to the mechanics, with resources in the education library and deeper dives on Substack.
If you want to hang out, Discord is discord.gg/GERGTP9GTS. And if you're interested in the community dinners, there's an interest list on the site.
We'll be back next episode on Monday. Until then, this has been the Syndicate Room. AI-generated voices, AI-generated script, AI-generated production. Educational only, not investment advice.